Nirmal Jain is also with us, Chairman of IIFL. Nirmal, good afternoon.
Good afternoon.
Still scratching our heads. What has led to this 750-point gain on the Sensex? The day after normally is reserved for better reaction on the budget. What's your own analysis? What do you attribute this big gain to?
So I think one of the key positive and the pleasant surprise of the budget has been that they kept to the path of fiscal consolidation and discipline, and they kept to fiscal deficit 3.9% and 3.5% next year. And what is more important here is that this number, the fiscal math, is credible, and basically these are all realistic assumptions about tax revenue and expenditure. So it's not that they just tried to make the number look good, but the underlying, in fact, I would say there's some cushion in tax revenue. They just taken 12% income tax growth, but they have not taken any tax on this amnesty scheme or VDI scheme that they have. So that can actually make up if there's any overrun in the expenditure side. On the whole, it looks up, so I think that has been one big macro which will lead to cut in interest rate by RBI and further sort of southward journey of interest rates, which has been one big problem with the revival of private sector investment cycle. Everybody says that what difference interest will make, 0.5%, 1%. It's more about sentiment. So the private sector investment on any capex is taken based on expectations about future and not actually what has happened in the past. So that way entrepreneur will be more enthused as the interest rate get into single digit. That is one. Other than that, I think now this government has come back to focus on rural and including Narega as well as a lot of other investment which is more capital expenditure and more productivity oriented, such as irrigation or on rural roads, as well as there are a lot of other initiatives about rural India. In fact, the allocation for rural sector has almost been doubled, sort of unprecedented. And that actually will take care of the demand side, because when we look at GDP, there's a demand side and there's a investment side. So the consumption led growth, and we had seen that when earlier rural folks had more money in their hands, that drives demand for sectors like FMCG or two-wheelers or consumer durables, and that basically has a cascading impact, and the domino impact basically makes the whole economic cycle run a little accelerate. So that is one part of it. Other than that, I think there is a significant increase in allocation for rail and road sector. Now, only thing that we need to watch out, of course, rate cut has to happen as soon as possible. More or less, there's consensus that RBI was waiting for fiscal discipline and a fiscal consolidation, so that has happened. Inflation is broadly under control. If you look at WPI, it's sort of deflationary or static. So in this kind of a scenario, rate cut should start. That is one. And other than that, I think corporate earnings, which have been disappointing, maybe it will take a quarter or a couple of quarters to revive. So market is looking at a big macro view. Having said that, I would caution that, just in a day or two, the budget is absorbed and market will again look for cues from global environment, global financial markets, as well as the sentiment for emerging markets. That I think will be a short-term tendency. But if you look at medium to long term, then India stands out. Even prior to the budget as well as with the budget, India is actually a bright spot in terms of economies, the fastest growing economy, and a very good destination for foreign capital as an investment. And government has made sincere attempt to remove quite a few of other bottlenecks, like say there was a tax anomaly or a doubt about pass through on the REIT structure, a number of procedural hassles in income tax, and the DTA status for AIF. So there are hundreds of such small provisions which are basically trying to resolve the problems. Many of them have been resolved, some of them will still remain. But I think on the whole, the approach is positive, and that is what market is recognizing today.
Okay, fair enough. Nirmal, hi, afternoon. This is Sonia here. I just want to pick up on that point you mentioned about the fact that you would still be a bit cautious in the near term because of global cues, etc. So what would this caution extend to? Is there a bottom in place for this market at 6,800 to 7,000, or do you think that question is still open for debate?
So again, what kind of unknown catastrophe happens in the global environment that we really can't predict today. Under normal circumstances, I would think that, I find it difficult that market will have a bottom which is, far away, maybe 5% or 7% at the most on the downside. I mean, unless something completely unforeseen, which you and I really can't visualize today, happens, other than, I mean, leaving that aside, I think market, is unlikely to go, if you talk about Nifty, then maybe 6,700 or 6,650. And you can work out parallel levels for Sensex. So I think on the downside, maybe 5% or 7% at the most. I don't see a bigger downside than that. Even in a corrective phase, if the global Q suddenly become negative.
Okay, Nirmal, the two stocks which have really led this rally, ITC and ICICI Bank, do you get a feeling that both of them were too oversold and are now good buys?
I think so, because ITC was hammered on the budget day also. And I think the excise duty increase on cigarette was more or less given, and the demand of inelastic brands are strong, and ITC also diversified, so it's a good FMCG company, and obviously long-term investors saw the opportunity. So both these stocks were oversold. ICICI Bank, again a private sector, one of the leading private sector banks, valuations from a peak were almost down by 35-40%, so obviously it became again a favorite stock when people are looking for liquid large stocks to build up long positions after the budget. That's how these two stocks have been favored.
Okay. You also made this point about the rural push that the government has done, which is quite credible. And in that, even in today's trade, we're seeing some of these companies like M&M post good numbers. M&M's tractor sales for the month of February has grown almost 20% year on year. Is this a time to shift to rural focused stocks, the tractor makers, some of the consumption oriented names?
I think so. So tractor makers, yes, but they also depend on monsoon, and I think by law of natural averages, monsoon should be good this year, and that is what would be because they had 2 bad years. So tractor is good, and also consumption discretionary consumption-led stocks also should do well. But overall, there's nothing negative for other sectors as well. So if you're building a portfolio, you look at IT sector also, you can look at private banks also, you can look at infrastructure, because there's a lot of outlay for road sectors, railways. So broadly, even other sectors will benefit. So I mean, one has to do a bottom-up stock picking, and that may be a good approach.
So far, Nirmal, for the last 6 months, a lot of experts were telling us that holding cash is the best thing to do. It's better to, keep your arsenal, and when the market gives you an opportunity, then get in, not right now. Is cash preservation not the strategy anymore? Is the strategy to go out there and deploy some money into the market now?
I would say so. I would think so, because but if you want to deploy money in equity market, then you should have a perspective of 3 years. In very short term, there can be sudden shocks or jitters from global markets. So if you are leveraged, it's not a good idea to leverage and invest in this market. And as far as if you have cash, I think even debt sector, now that the interest rate should be heading southward, so it's not a bad idea even to invest in debt funds or debts, fixed income products, or even government securities. So I would say that if one is holding on to cash, then should get it deployed in a mix of equity and debt. If you have a appetite to hold the stock for 2 to 3 years, then yes, equity makes a good investment choice.
Okay, so Nirmal, if I can read your body language right, I mean, you are still not constructive on this market from here on for a big rally. You still believe that it was a bit of a short covering pop, and we'll be back to the mercy of global cues, and there's still a risk of this market again falling back to previous lows.
No, so there are two things. If you are a trader or you are an investor, if you are an investor for say 2 to 3 years, then I am pretty certain that this market will give you more above average return, or a better return than what your alternate asset classes can give you. But if you are a day-to-day trader, looking at 15 days, 1 month, 2 month, 3 month scenario, I am not an expert on that, but I won't feel comfortable for that. So that is how it should be viewed.
All right, Nirmal, thanks a lot for your time today. So that's the call from IIFL. Ashwini, just reading your tweet, he was